Australia's grain harvest is revving up, and with some recent handy rain in the right places at just the right time, the latest prediction is for a near record crop of around 27 million tonnes. Austrade's chief economist is Tim Harcourt. I spoke to him earlier about the binbuster crop, and he expressed confidence about selling that massive volume of wheat.
Well, I think we can. Because the emerging markets is basically where a lot of where our crop goes to. So China, India, Indonesia, Latin America, increasingly we find ourselves at the right place at the right time.
I'll get to the markets shortly, but right now there's a massive amount of wheat still in Australia, about 8 million tonnes from last year's crop. When you're trying to sell this year's crop, surely that's an issue.
Well, that's the issue, isn't it? For Australia now, with demand from the world, it's all taking a walk on the supply side, how quickly we can get it out to the world. That's our issue in Australia now. It's not lack of supply.
Now, Egypt, the world's biggest buyer of wheat, is buying almost exclusively from Russia. Australia can't even get close with their tenders. Now, how can we possibly compete against Russia?
Well, I think basically what we're seeing in Australia is we've still got the most efficient, the most productive farmers in the world in this sector. And ultimately, all the demand we're getting from China and India from those markets are going to keep us pretty busy, at least for the foreseeable future.
But even the United States can't compete against Russia, so surely now America will be chasing those same markets you've mentioned.
Well, they'll try, but at the end of the day, Australia's efficient. Australia's got great research and development. Australia's got very high productivity, and for the most part, if you had an open market, if you had a free market, Australia would be the greatest, most efficient wheat producer in the world.
But surely you have to acknowledge that America is also very efficient. They've got researchers and they're very aggressive marketers.
I think ours are better still. In our model, the GRDC goes all around the world, Canada, America, Brazil, you name it, and people looking to adopt it. So the Australian model, whether it be our economy or GRDC, is well best.
Now, the possible markets you've mentioned, Brazil and China, are you suggesting that they'll be buying Australian wheat?
Well, the big story really has been, with the global financial crisis, has been the shift in the world from the northern hemisphere to the emerging markets. And Australia used to talk about the tyranny of distance. I think we're now talking about the power of proximity, because we're in the right place at the right time. We opened up our markets right when China, India, ASEAN, Brazil have become more important globally. And so Australia is very well positioned.
So what sort of volumes are you thinking?
Well, I think the main thing is protein consumption. People move from wheat through to sugars and meats and so on. And at the moment, China and India are still very poor, despite the spectacular growth, and that's principally where a lot of the wheat's going now.
But India this year is actually exporting wheat.
To some extent, but they're still an importer. But generally, I think the urbanisation that's driving demand for coal, iron ore, LNG and so on is now also, as the middle class has grown, India, China, Indonesia, ASEAN, that's created great demand for our agribusiness products and our expertise.
So the bottom line for Australian farmers, what sort of price can they expect for this year's crop?
We could expect a strong price. We can still expect a relatively high exchange rate, but still, I think, given climate conditions have improved, we're in a good sweet spot at the moment.
So you're saying we won't be dumping the wheat at any price just to get rid of it?
I don't think so. I think the demand we're seeing from the emerging markets will be sustainable for some time.
Tim Harcourt from Austrade, thanks for your time.
Good to be with you.
There's a confident bloke. Now, selling may or may not be a problem, but one thing is certain about this coming harvest. The transport and storage of the crop will face unprecedented problems. The dismantling of country rail lines and the lack of silos will cause headaches in every state. That's ahead. And despite the late rally, most Chicago futures finished down for the week. Most traders appear to want some clarity about the European debt crisis before extending positions. So prices were backpedaling across the board. Soybeans have dumped $2 a bushel in as many months, and both wheat and corn have shed $1 a bushel since early August. And the negative sentiment was also evident in New York, where sugar continued its slide. Down 2 cents a pound for the week, that's a drop of more than 15% in just a few weeks. Cotton had some support, but that's still nearly 10% down on early September. Local futures were also soft. WA wheat for January slipped $5, while milling wheat on the East Coast fell below $240 a tonne. Now to livestock, and the recent rain has seen restockers emerge with fat wallets. Young cattle were in demand and many processors actually had to chase interstate stock. Subsequently, all categories had a price lift. Trade cattle went up a whopping 8 cents, as did feeder steers. It'll be interesting to see what happens this coming week as numbers improve. The weakening dollar is no doubt helping those export categories. And the Eastern Young Cattle Indicator now stands at $3.98. That's up 5 cents for the week. The live trade out of the north remains very active. The big problem for exporters is sourcing cattle at the right weight, that is, below 350 kilos. I understand there's a big push on to get Indonesia to relax that weight out to 380 kgs. Steers out of Darwin are up to $2.15 and an even $2 for heifers. Townsville quotes are about 20 cents less. The lamb and sheep markets shared the joy last week as good rain alongside tighter supply saw competition lift, with restockers again very active. Quality was good to excellent, so the lamb indicator went up 39 cents and mutton went along for the ride. Finally to wool, where buyers closed their wallets last week in response to the economic uncertainty. This was despite recent optimism about the general outlook for wool. The Eastern Market Indicator closed 29 cents down after sales in Sydney, Melbourne and Fremantle. 1,164 cents a kilo represents a fall for the week of 2.3%. And the EMI has now slumped 14.4% in the first 2 weeks of the season. And that's the Landline check on prices.